Okay, folks, we're live. Welcome to Gentlemen of Leisure. We're here to support you with living well and creating financial freedom. 4 questions. Number one, how far does the Fed hike interest rates to reach the neutral rate? What impact will this have on multifamily real estate? That's number one. Number two, why is retirement a lie? Number three, I like this one. I spent 80,000 for this 8-hour private jet flight. What is the pitfall in that statement from all these YouTubers you're seeing living this extravagant lifestyle? Number four, how do you eat well? So Mario, number one, 5 minutes.
Okay, where are you at? I'm just curious what you see breaking first. Where does the Fed raise interest rates to get to a neutral rate where it's not expandatory nor contracting the economy? And then what does that do to multifamily real estate?
Well, really, it's where you think the current inflation rate is. Some people think 9%, some people think 16%. So I would say let's pick the 9%, and they would have to hike interest rates above that amount at 10% to tame inflation. So what does that do to real estate? Well, we have a friend, myself and my wife, I won't name his name, but he's got a big portfolio, and he's been buying multifamily left and right. I mean, in Phoenix, Vegas, and Austin, and they've been buying big deals, which means they've been overpaying for them because there's a lot of competition. So what happens to a guy like that when you buy for appreciation is you end up getting smoked, because when you buy for appreciation, you expect the next guy to pay a higher price, and you don't have like strong underlying margin of safety and cash flows. So what happens is that individual, he's going to say, no, I'm not going to buy it for this amount as interest rates are going up. As interest rates are going up, the debt service is going up, one of the underlying costs is going up, so your revenue, where's that? It's going down. That's the issue. So there's certain points, it's different for each person. It starts going up, they start getting squeezed.
Well, there's different markets. I mean, it's not only is it different for different people, but there's different markets. I just read that Fort Lauderdale has rents collapsing or contracting by 46%. So Fort Lauderdale, the rents are going down and the cost of capital is going up. So that's a real difficult market. If you've paid that premium, if you competed with other investors to get that property, a large multifamily property in Fort Lauderdale, and you have this headwind where rents are going down at the same time the cost of capital, if you're trying to refinance, is going up, and it gets really difficult to keep that asset performing.
Exactly. So I think that's what's going to happen. What you're going to see is you're going to see the main indicator you're going to see is defaults. That's going to be the main thing, because what we're really talking about here is wherever you have mortgage interest rates, wherever that's one of your underlying expenses, if you didn't sort of lock that in at a really low rate, and let's say what you're making is at your revenue. I got a little guy that just came in behind me. No, Ellis on a podcast. It's 7:15. Go over there and play, Ellis. So just got the little guy came in. But anyways, so if you're making money, right, one of your underlying costs is going up. If you didn't build in that margin of safety, it starts going like this, like this, like this. You can't no longer can make your payments, and you start defaulting. That's what we'll start seeing. I don't know where, but I think it's going to be in the retail sector first. It's going to be in houses at about the same time, and then it's going to transition to multifamily as people can't make their payments.
I think there's two historical time periods to look at: is the 1940s when we had inflation, and the 1970s, 80s when we had inflation. And I think will be some combination of there'll be headwinds that will fight that were common in both the 70s and the 40s. If we look back in the 1980s, Volcker had to take the primary rate to 20% in order to tame inflation. I don't think in this current environment you could take it to 20% and it'd be politically viable. But we might want what happens if we don't do that might be worse. You know, we might want a Volcker recession compared to what we're going to get. But I don't know that the politicians will allow the Fed to raise interest rates to the neutral rate. You know, if you calculate it by the Fed's numbers right now, R star is the calculation you'd use to come up with the neutral rate, or what they use to calculate the neutral rate. It'd be about 9.1% is R star, which is how they calculate where they would need to bring interest rates to theoretically be neutral. That's going to pop a lot. A lot of people are going to lose their assets if the cost of capital goes that high.
Great points. Okay, question number 2. You go, man. What's question number 2?
Okay, why is retirement a lie?
Because I think that's kind of like a trick question, because retirement's all relative to the individual. I'm gonna let you start with that one. I want to hear what you have to say first.
I would say that a gentleman's responsibility to cultivate physical fitness, to cultivate resources for himself and his family and his community, and to cultivate deep and meaningful relationships never ceases. So his responsibility to go to the gym, eat well, exercise, take care of his physical fitness so he can do the second two, which is gather resources or continue to expand his pillar of strength in the community with resources for himself, his family, his community, is kind of predicated on the fact that he has some physical fitness. And then third, his ability to make deep and meaningful relationships is also a factor of his physical fitness. Being a guy that can be dependable, can be trusted, being healthy is part of being dependable, and having resources, number 2, is part of relationships. You can help people out. If you're sick and poor, it's hard to help anybody out, let alone yourself. So I would say retirement, meaning is saying that something is ceasing to be a responsibility, but a gentleman always has those responsibilities. I would also say that you can have a retirement from slavery. You can have a retirement from being a serf. You can have a retirement from being an employee, and that's a good thing. Hitting that retirement date, whether that's 20 years in corporate America or 20 years in a law practice. One of my favorite and idols or business idols in this world worked in a law firm for almost 20 years, and then he had a business career afterwards. He didn't retire from work. He retired from being a partner in a law firm and doing legal work that he didn't particularly probably find fascinating every day of the week. He did his 20 years. He moved on, and he had a really successful business career. And he's a massively successful guy in Pasadena, California. But it's sort of a lie. Retirement, saying you can ever retire from your responsibility is a lie. You can retire from slavery, serfdom, and employment, but you never completely retire from your responsibility to take care of yourself with physical fitness, gather resources, and build relationships. Over to you, Warner.
Yeah, so I think what happens is people think retirement is, you said it really well, you work a long time and then all of a sudden you just give it all in and you just drink, hang out. I think that's a poor way to look at it, because it sets yourself up to, you should keep growing. It sets you to start sort of dying. And what you said was very important. Retirement is really just a transition from working a certain amount, say 80 hours a week, and then now you're like just major investments 10 hours. But then that 70 hours is not just drinking and relaxing. It's working on your garden, working on your vehicles, working on a new habit, a new skill. You're just transitioning that effort to something else. Maybe
That's right.
You really love the passion projects you really love that don't bring money, yet you've worked the years before to create the cash flow and the financial investments and everything else that'll set you up for those retirement years. But the key is not, I've lost your mind, I don't know if you're still there, but the key is not to basically just turn into a sloth and do nothing.
Yeah, alcohol has ruined more good businessmen than almost any other drug out there. So absolutely. Let's go into that next question about aviation and what's wrong with spending $80,000 on 8 hours of flight time. Any thoughts on that?
Yes, what I've noticed about a lot of YouTubers is you have to be very careful who you listen to, because you don't know where they're generating their money. You don't know if they're renting that jet. You don't know. I mean, I'm talking about literally, if someone's literally giving them the jet for like a 15-minute photo shoot, they could say, I just spent $80,000 on the jet. And it was literally a 15-minute photo shoot, or someone took them up and went around the pattern, which means you just took off, did a box around the airfield, landed again. You just never know. You don't know the integrity of the individual. So the reason why I picked that question was because don't focus so much on the lifestyles of all these individuals, because you may or may not get there. I don't know, what you know about money, what your goals are, how hard you're going to work. I mean, it takes to get to that level. It takes like really. It's just like being a Navy SEAL or Marine Special Operations. It takes a lot of work to get to that elite level. And if you just, what'll happen is when you're creating your goals, you'll see this really high level. I've done this before, and you get so frustrated that you never get anything done because you're down here and this level's way up here. So I think a lot of that stuff it's good for a little motivation, but I think we shouldn't focus on it too much. All these people like Grant Cardone, I didn't want to say name on the internet, but all these individuals who are just flaunting this lifestyle. If you notice the best CEOs like Larry Ellison, yeah, you see him on their yachts, but it's more of like the media kind of caught them doing that. He wasn't like outwardly trying to find the media to share with them what he's doing. I would say focus more on being humble. Say, okay, that's a great idea, but I wouldn't spend too much time thinking about that stuff unless you're looking for videos or research the type of jet you're going to get in the future. Because like me, I'm a pilot, so you're like, oh, that's interesting. Grant Cardone's got a JB650. What are the characteristics of the aircraft? What if it's a dopamine hit, something that sort of emotionally pull you towards it? That's not going to get you to what this channel is focused on, which is living well and creating financial freedom. It's a building block approach, and knowing also. So my whole point is take the emotion out of it, look at the performance of it. Go, okay, how much does it own? How much does it cost to run that jet? I mean, $2,000 an hour. Do you have that right now? No. Okay. Well, what's required to get there? That's the point. Take all the bull out of all the social media and get down to the ground level and go, hey, can I really attain that? Do I really want to attain that? Is that really for me? Because you see this lifestyle, but you don't realize what it's really like. That's my point.
So 2 weekends ago, we were up in Malibu, Warner and I, and we met a young lady who was a nanny for a very wealthy family. And she was kind of talking about their lifestyle. And the gentleman is in a very volatile industry in the apparel company that has the 2 houses in Santa Barbara, or correction, in Los Angeles, and a house up in Malibu, and this really expensive lifestyle. And you think, how well can you maintain that lifestyle when things are not going well? What I think a smart course of action is to kind of put yourself into unforced recession periodically, even in the good times, so that during the bad times you have capital and space to maneuver and maintain your lifestyle when things aren't going as well. Second point is, how did you pay for the jet? If you paid it off of your work and off of making good decisions and off of free cash flow, no problem. Spend $10,000 an hour flying a jet around. I don't think it's wise to create envy in other people's lives in our society by showing off and flaunting your jet. However, I don't begrudge you for owning a jet or flying a jet if you've made good money. If you're doing it off of poor parishioners, people in your church, and you're a pastor that's flying a private jet around, and you're doing that off of donations from people, I think it's shameful. Also, if you're doing it off of integrity violations with your investors, kind of scamming your investors to fly for your own lifestyle so you can support your lifestyle, it's absolutely shameful. Is it technically maybe legal? Is a certain real estate investor in Florida, actually putting together legal documents that are technically legal? Sure, he probably is. He's probably got good attorneys advising him this is actually legal. But if you're doing it and you're actually abusing investors, it's shameful to have that kind of lifestyle and show it off. So if you're doing it off your own work and your own effort and making really wonderful business decisions, and you can afford to spend $10,000 an hour on flight time, no problem. But if you're doing it by hurting others or taking advantage of others, it's shameful. And I don't think it's something that it's not a net positive for our nation, is to create this envious lifestyle. So I like what you said, Larry Ellison. They kind of catch him on his yacht, or they kind of catch him moving between locations on his private aviation assets. He doesn't lead from the front with that image of him gallivanting around the world on a private jet. Those are my thoughts, Warner.
Yeah, great points. That leads us to question number 5. I get a little noise in the background from little guys, but question number 5, which is how do you eat well?
Four,
That's a really
Warner. Four
important question
questions.
because
Four
you've made
questions.
the money or you're on your route to making money. Health is, what would I say? I said number 5. I was a little early, guys. Apologize.
Number four.
Number 4. Number 4. So it's homework.
It's early.
So one of the things that drives me nuts is you see a lot of people hit that mute, brother. You see a lot of people, and they're like, what is it? They have all this money, but they're so like spendthrift when it comes to food, and it drives me up the wall. So, because one of your number one components is this. The only way to power that component is high quality food. So how do you eat well? It's real simple. Find stuff from the source. What that means is find stuff how it would normally grow in nature, meaning organic, biodynamic. It's going to take some time if you do this for the first time. It's going to be frustrating, but spend your whole lifetime searching for the best quality food, and it'll improve your energy, it'll improve your mood, it'll improve your health, it'll improve your business. And it's one thing that not a lot of people talk about. Like, it's like invest in your food like you invest in your business. If you make a financial decision, well, should I invest in this because look at the food label, go, hey, should I have a Red Bull or should I have this other drink I like called a Perps, right? Which one? Well, the Perps is much higher quality ingredients and you can taste it. It's not going to be as manufactured chemically taste as like a Red Bull. It's going to taste probably a little bit more bland, but once your taste buds get used to higher quality food, you'll appreciate the higher quality flavors, and those flavors are going to be higher quality and they're going to empower your mind even more. Your thoughts?
I would just make it very simple, or this is how kind of I put it into my life. I eat higher quality food, but less of it. So take the same amount of money you're going to spend, buy the higher quality food, and to take the quantity down. As you're getting older, you need less and less carbohydrates and potatoes and starches and things like that. Eat more protein and eat higher quality food and less quantity. So get your daily macros, and that's it. But have most people in America overeat. It's weird that our poorest people are their problems are directly from overeating or from eating poor quality food. Too much poor quality food is kind of what they're suffering for. Where if we went back 100 years, we had more starvation as a problem, or even 20 or 30 years, we had people that were probably malnutritioned versus the current state of diabetes. Type 2 diabetes is probably one of the leading, and heart cardiac events is probably one of the leading problems we have for our poor people. So as you make more money, I think spending it on higher quality food and less quantity, and a gym membership, what is it, $20 a month if you live outside of a town, maybe a little more in LA, but going to the gym, make that a lifestyle. I love to get up in the morning and go to the gym. It's part of my daily routine, daily battle rhythm. It's a lifestyle, and you'll meet interesting people. The same guys that are at the gym every morning at 6:30 are some pretty good dudes. They got some stuff figured out. Do they have problems? Sure, but physical fitness probably isn't one of them. That's my thoughts, Warner.
Yeah, great point. So to recap, find food at its source in its most organic nature. How do you do that? You go to like simply a farmer's market. I mean, that's just the simplest way to do it. Find a farmer stand. Uh, when you're looking for ingredients online, look for the best growing regions. Like I realized just recently that some of the best red durum wheat grows in Arizona. Who knew? People from Italy order that wheat for pastas in Italy. I had no idea. Phenomenal wheat, right? So go to the source. Number 2, like Mario said, is called the numbers diet. Always eat, and well, the way to do it is figure out what your weight is, and then eat in a calorie deficit till you get there, and then maintain. So for me, my calorie deficit is 2,000 calories to eat to be in a 500 deficit, and then obviously 2,500 to maintain, and then figure out your macro level: proteins, fats, carbohydrates. You can keep your carbs low, but when you're going through a workout, then up your carbs higher, and sort of start working through those kind of math. It's all different for each person, but yeah, Mario's saying is correct. Is when you're working out more, carbohydrates in a sufficient form, you've got to have them. pump those in when your workouts are high. When they're not, lower them down, and then focus on good, lot of veggies, proteins, and fats. And that's it, man. We're at the end. That's 4 questions. Thanks for watching, guys. See you on the next one. See, no